Hello, everyone. Welcome to today's session. Let's jump right into it here. Market conditions remaining bullish in a bull market. Overall bullish trend rank is at 2162, and when we reference that number, it's this line right here. So, and this upper chart is 1 year. This bottom chart is 20 years. So this entire chart is only encompassing really about this much of the data on this lower chart. Pardon me. And so when we have this crossover right here, that's where this is taking place. So we have this trend move, this trend reversal from that bear market up into this current bull market, and this topping pattern right here was this one right here. So we're making new highs on the market as a whole, also making new highs on the indicator. Now, once this starts to kind of flatten out and top out, we can run into a couple scenarios. One, we can, we start to get some retracements, things start to move back a little bit, but we can also get a pullback. Since we haven't had one yet, we could get a pullback and then another push higher still while this is starting to decline. So as we start to see this one flattening or starting to decline, if we get some volatility to the downside here in the markets, then that could indicate that we could get a downturn here shortly and then a one more push higher. And that downturn could be significant. It could match this downturn here. Let me get rid of those lines. The one we had last fall, and we could retrace back and then retest that upper level here and create some support for continuation there. That's one of the scenarios right here at these levels where we could see a bit of a retracement. We're certainly extreme, there's no question there, but trying to pick up this market top or going aggressively bearish, probably, I mean, it's getting close to that time to at least be considering how are you allocated towards equities, how much cash do you have, how many equity holdings have you got, and be watching for some additional signs here. We do see one of the positive things in the short term, we did see breadth bump up to this upper extreme range, and we've already seen sentiment there. So when we may see momentum catch up to that, but we haven't seen that in this rally. We haven't seen breadth move where momentum hasn't moved. Not a huge move here, but it did spike that buy-sell ratio back to 176. Okay, so we've got that bullish bias, just that slight bullish bias right here when you have green above red. And I really love this indicator because it's just a quick glance of what your current short-term bias is. Okay, if you've got green above red, you know that you've got more buys than sells in the database. In this case, it's not extreme, it's relatively flat, but almost approaching 2-to-1, which has some bullish tendencies to it as well. One of the other things we've mentioned and talked about is on the index scans, when you're looking at the buy-sell ratio there, and we've got the Russell and S&P 500, yesterday's move pulled a bunch of stocks back into that uptrend. So we're now at 7-to-1, Dow's at 5-to-1, mid cap 7-to-1, and so still some really positive breadth in the major indices as well. That's that is bullish until it's bullish until it's not. Okay, it can take 1 or 2 days to get a really nasty downturn, and the market's trying to decide and say, hey, yep, we're done, we're moving lower. But we've got there's still some bullish things that are happening here. We've certainly got we've yet to see any of the Fed involvement. It's all been talk and it's all been anticipation really for almost a year. I'd say really since last fall, they were talking about lowering interest rates. Eventually, they still have yet to do it. They're still talking about it and say they're going to get 3 rate cuts, but the market is watching closely. And one of the things we can be watching here, we've mentioned this before, is starting with your bond, is looking to see, do we have bonds stabilizing? This is TLT, which is the 20-year ETF for bonds. Are bonds stabilizing and starting to move back up? This was what bonds did when the markets bottomed out last October, November, and started to rally. Was equity started to rally there as well, because that is interest rates were dropping. As this is going up, interest rates are going down. That's what the market wanted to see. And I think that's what the market still wants to see is, are we going to have these higher interest rates, or is the Fed going to lower the interest rates? How is that going to affect equities? And we're seeing some little glimmers of trends turning here in those bonds, both the long-term and the short-term bond. This is the short-term bond SHY, and as prices move higher, then interest rates move lower. I've mentioned this. I also might have mentioned this on last week. The bond yield curve, the short end of that yield curve is what needs to come down. These interest rates need to move down lower because they're higher than a 30-year. You make more money in 3 months than you would in 30 years. That's an inverted yield curve. That's not a healthy bond environment. We want to see interest rates moving lower, more to something like this, okay, where you have short-term interest rates a lot lower, long-term interest rates are higher. That's a healthy bond yield curve, but it typically happens at a market bottom, and we haven't seen any indication of a reversal yet. But that bond yield curve has got to correct itself, and is it going to correct itself with the markets as a whole in a downturn? That's yet to be determined, right? But some kind of a retracement is certainly getting nearer than further. We're closer to it than we are away from it. Let's look at S&P 500. Relatively flat. We're still stuck in these uptrends to where there's just this tight consolidation. Nobody's interested in selling. It's kind of a waiting game right here for more data, more interest rate information, probably some profit information. And AI and productivity and all of those things are really hot topics, and the market is anticipating that to provide a lot of productivity to companies and lower costs, increased profits. Stock markets love that. Okay, so that's some of the scenario here in S&P 500. When you look at this chart like this, it doesn't look that extreme. Okay, and that's the other thing, is the way that you view the data sometimes can skew your perspective, because if you have, for example, if I'm looking at this chart, if I'm looking at the directional alerts chart even, and I'm like, okay, good Lord, that thing is gone straight up. Is it going to come straight back down again? It looks, versus when it's spread out a little bit and we're looking at it with a little bit different perspective, it really can affect how you make decisions by just the way you're looking at the charts as well. So there's no question, again, that the range that we're at, this is only been here a couple of times in the last 10 years, 12 years. So it's we are definitely at this upper end of the range. It's been a nice rally. Can it continue with the aggressiveness that we've seen? More than likely not. But if it can continue to kind of churn along like it's doing, that also is constructive. I'd rather have that than a massive downturn or really any real big risk or fear or uncertainty that creates a huge amount of volatility as well. So let's take a look also at a couple of the sectors that we've been focused on as well with commodities, I should say, and that is oil and gold. Oil having a big move today. Well, not big, but it's moving up 1.5%, 1.6, and a potential for that breakout right here. I mentioned in my update this morning that this trend on the 6-month time frame is still a downtrend. It's still connecting here and connecting here, and that the Fibonacci tool draws at this direction. Now this is the 236. Okay, you can see, but it's in a downtrend. So if we were to bounce here, if you're looking for downtrending stocks, you can do the same thing as well. But now it's reversed and started to head back higher. So one of the ways to just adjust that is just to slide this. There's also a highlighter tool right here, this selection tool, where I can say, okay, I only want to look at this amount of time, and it'll redrag that tool. But notice what it did down here. So sometimes I'll just slide that bar over. So we're almost to that 6-month time frame, but not quite. But this current uptrend in USO, now we can look at it the way that we like to look at it, right? And that is, here's our momentum zone, here's our retracement, pulling back, potential breakout here. This is a momentum location and a momentum trade for USO right now. It's in that upward trend, and the path of least resistance is now to the upside versus resistance. I should say support, okay, or down here, but it's cleared all that. It's done a lot of the hard work to kind of break through that. Now it's getting a little bit more blue light to the upside. And if we look at a little bit longer term perspective, though, we've got this uptrend and then this big downtrend. So there could be some work to do here as well in USO. I personally, I hope it tanks, because I don't like gassing up. USO, and then gold also. Gold is, let's bump back here and go to commodities and look at gold. It's having a nice move here as well. So gold continuation to that upside. USO, gold and oil moving higher. Equities kind of stagnating. Bonds trying to move higher, kind of flattening right here. That's kind of the market backdrop that we're dealing with currently. We are seeing broad base, NASDAQ 100. We're seeing Russell 3000, continuation of the uptrend. We're seeing Russell 1000. We're seeing Dow. All of those have really similar, really nice, clean patterns with support, okay, and bouncing off that support. If we were under some of this and we were retesting and now creating some resistance, that's what we also want to be watching for. When that starts to happen, once we start to break down and retest and it doesn't work, and then it creates resistance and it breaks down, and we get that overall pattern as well. But we're not there yet on anything, honestly. And so be watching for that, but and anticipating that, making sure that you're preparing for that now versus when it's actually happening. And that's sometimes a hard decision to make is, well, dang, I don't want to miss out on more upside, but I also don't want to have too much exposure if the market does retrace. So the way to be able to do that is just adjust your position size and your cash available. So in terms of portfolio, in this case, we're looking at the amount of cash versus the number of holdings, and you can always adjust that, okay? And that's probably something we're going to be looking at here shortly as well, with some of the big winners that we've had starting to retrace just a little bit right here. But that's one of the approaches. One of the training modules that I wanted to go through today is I wanted to go through how to create a custom screen on the screener here in TradersPro to be able to look for something that you may want to create a custom scan of only the kinds of stocks you're interested in looking at, or only the possible scenarios you're willing to consider. Maybe you're only willing to consider really large cap names, or maybe you're willing to consider something that may not create as much volatility. Every stock, obviously, there's always risk, but when we're dealing with some of these maybe biotech names, or there's a lot of money going into a lot of companies that have not proven that they don't have any money, they're not making any money, there's no revenue, so once musical chair game stops and people start selling, the companies that have been really speculative are going to get punished. So let's build out a scan and say, let's look at some scenarios of some options here. So we're going to start out here with the number of shares or the share price. We can simply say, so when you refresh this page, that's what we want to do. Refresh it. This is going to start it out as just your default setting. It starts out at 0. It's already got a couple of things selected, but let's go and change that. So I could say, all right, I don't want anything under $10. I'm going to have this max as any. I want larger market cap. I want well-established companies. I want a market cap of $1 billion, and I want it to have lots of volume. I want the more volume, then the more institutional participation that's happening. Institutions are ultimately the group that move the market. They've got the most money, and they're making the most investments, and they're the most active. They're doing the most buying and selling, and individual traders are going to make up some of that as well. But ultimately, institutional money shows up in volume, institutional interest, I should say. Okay, so if you have if you've got consistently 1 million shares on a minimum trading each day, that's a lot of shares. You're going to have a large institutional type name that may be the kind that we're looking for. Let's start with that and let's leave it. The next one is PE ratio. Okay, your PE ratio, in this case, it's really one of the only fundamental things in here. There's a few other fundamental things in here, and these selections they're here for a reason. Okay, there's a lot of things that aren't there. It's because they're irrelevant to what we're looking for. Some of these are also irrelevant, but they may be relevant for scanning mechanisms, and I'll show you what I mean by that. But in this case, PE ratio. So one of the things I can do is just quickly, if you understand what the PE ratio is. The P part of the PE ratio is price, and the E part of it is earnings. Okay, so you have price and you have earnings. So if we have a PE ratio of 1, or higher, then we know that there's at least earnings, okay? There's at least some positive earnings in that ratio. So a lot of times I'll do that. I'll say, all I want is a company that has earnings. And so we'll do a minimum of a minimum of 1. So now it's going to pull in, it's not going to pull in any stocks that are at least losing, that don't have earnings. Okay. So if you want one of the factors to be, I've got to have a stock, I've got to have a company, because remember what we're dealing with. We're dealing with companies. We're dealing with an underlying entity, an underlying living, breathing organism that is growing and that is contracting. And that is what every company is. A company, let's say Costco, for example, as they're growing, they're continuing growing in the value of what their earnings are continually increasing. Therefore, the value of that entity is increasing. Well, it's our job as traders and investors to decide what we think the value is, okay, of that company. And so we go in and we buy and we sell the stock based on what we think the value is. Okay. Now that is a deeper dive. That's when you do have hedge funds and pension funds and institutions that are like, they know exactly what they're looking for and why, based on earnings and all of these other factors. We don't need to be quite that in depth. We just got to be able to look for a certain amount of something, okay? And we can decide what that something is by setting up our scan right here. Now, if we wanted to include a dividend yield, okay, we may say, I want a company, $10 or higher, $1 billion in market cap. That means its market size relative to others is large, okay? And so you're dealing with a bigger company that can reduce risk a little bit because they're so stable. There's no risk of them going under. They're usually pretty consistent in their earnings. They're usually pretty consistent in everything, okay? And so they tend to trade a little bit more smoothly, but the upside tends to be limited in most cases because they are so big. And then you're dealing with the law of large numbers, where if I have a $1 trillion company like Apple, what's the probability of Apple going from 1 trillion in market cap to 2 trillion? It might already be at 2 trillion, I'm not sure. But my point is, once it's already that big, Amazon, Microsoft, all of these companies, how is it even possible for them to double? Well, they're doing it, and they're doing it by making a lot of money and lots of acquisitions, and they're continuing to do that. So it is certainly possible, and it happens in really good companies, really well-managed companies that are this big. So let's leave it at, let's remove the dividend, because a lot of growth types companies don't pay out a dividend. They would rather pile that money back into the company itself instead of paying it out to shareholders. Let's also leave a volume increase not here. This is one that I do like though, and I'll show you why. And then let's also add, let's leave just the PE. We'll leave some of these others alone. Now, these are available anywhere. Okay, this is just general public information as far as a company is concerned. Where it becomes a little more custom to TradersPro is what now do I want to apply this information to what momentum signal? Okay, so I could say I want stocks that have this criteria, but I also now want to know, have they gone from a hold to a buy, okay, in the last day? So I want something that's going to provide some actionable decisions for me that day or relatively soon. And that's what the signal change does. If it's gone from a hold to a buy, that's an actionable event that you may be able to make a trade on. And that's all I want. And then strength rank, I want to keep the ranks. Let's go. We might, because it is relatively thin, we might not get a big selection. So we want to keep this pretty wide. So let's set that here and let's see what we get. Let's see what stocks we get pulled in here. So we've got 31 stocks. Okay, I'm going to save this and I'm going to call it, live class screen. And we'll save that. Okay. If I don't save it, sometimes if I go back, well, here's an example. If I don't save it and I'm looking at, let's say I want to look at one of these other scans that I've created, and maybe it's this one right here. Okay. It's going to set this up. Now this is saved to this scan. And if I want to change something, say I want to add let's say I do want to add PE ratios to this one of 3, and I pull it in. Now it's got this. If I go back, it deletes it. Okay, so you have to, if you want to make an edit to anything, you've got to save it. So in this case, now my live class screen is here. And let's pull it in. So we've got 31 stocks. Let's take a look at the top stock here and see what it's doing. So it's a real estate investment trust. It's got a 97 rank. It's continuing to move higher. Nice uptrend. But this, and again, this is as of the prior market day. So it's not going to include today's move. This is the scan criteria. That's why when you're running your scans, you ideally want to do it after the market is closed. All of this database is fully updated by 6:30 Eastern time. Okay, so after 6:30 Eastern time, you're going to have new scans, and then obviously that'll last all night long until the morning, and then the market opens at 9:30 a.m. Eastern time. Between those hours is typically for an end of day system, which is what this is, to be able to make the analysis and say, okay, I'm going to buy in today. Okay, and then this becomes today. You're in that trade at the open, and then you can set up your stop or however you're managing the risk on that as well. So there's an interesting trade. Eli Lilly is another one. It's gone from a hold to a buy. Okay, so these are household names. These are massive companies, and they are and they're growing. You've got Zions Bank. You've got quite a few banks actually in here. You've got Home Depot. Okay, you've got, let's just see if there's any other. You've got Merck. Okay, Amgen. So these are the kinds of names and the kinds of companies that, if those are the kinds of names you only want to own, Cameco is also just cruising right here. That wasn't Cameco, it was another one actually, but it's been doing pretty well. These are big companies now, and they all qualify for the, based on the settings that we did inside of this scan. Okay, now if I wanted to make any other changes, let's say I want more earnings, okay, or I want a higher, let's leave that at 1. Let's say I do want, now I want to play with some of these numbers here and say I want annual revenue of 10. Let's do last quarter of 10. And a lot of times when I name these 10, 10, 10s and 5, 5, 5s, and it's usually having to do with these are the three, for me, the three most important scanning criteria, because we're talking about earnings. We're talking about talking about growth of the company, money coming in with sales, quarterly EPS, the recency of the earnings in the last quarter, annual EPS, the recency of the earnings growth, the earnings per share. EPS means earnings per share, the growth of that annually, year over year or quarter over quarter, 10%. The minimum has to be 10%. So let's see if that clears out any of those. Okay, now that left us with 2. Okay, we've got tech and Stryker. Let's look at tech. 4% mining. Okay, it's a basic material stock industry. And now from here, don't get hung up on the rank. The rank is important, but the rank is based on performance. So a lot of times when you have a high rank stock of 99 or 90, it just means that it's performing really, really well in terms of price activity and momentum. It doesn't necessarily mean that it's earning any money or anything else. The rank is entirely based on price momentum. It doesn't include earnings, doesn't include anything else. It's just price momentum, because at the end of the day, that's really what TradersPro is focused on, or at least that's the idea, is looking for stocks that have this price pattern. Okay, they're going this direction, and then we focus on this momentum zone. We get a pullback. Okay, here's the buy signal. This is what it would have looked like if you were running your scan last night or this first thing this morning. Then it would look just like this. Good grief, Jesse, there we go. Okay, so let's go right here. Let me just move that bar. So this is what that would have looked like. I would have looked at that in my scan, and I would have been licking my chops saying, man, that's a nice looking setup. You've got increasing volume. We want to see an increase of volume over the prior day, ideally, and a solid confirmation bar happening right here at a support area, and ideally still inside of the momentum zone right here. So ideally still up here, finding support, and then you get confirmation. And now we know, what else do we know? We know that this thing has got some fundamentals behind it, okay? Because we decided what it was we were looking for. Now let's go back to that scan. Okay, I'm gonna actually let's add this to a watch list. So sometimes if you're looking through stocks, this happens to me all the time, and that is I forget what I've looked at, and I forget, like, oh crap, what was it that I was looking at? And then you've lost it and you can't find it. So if I find anything at all that is interesting, I will add it into a watch list. Okay, and then I'll go back and I'll review that watch list and see if anything has changed. So this stock as well, Stryker, let's look at this one. Same story right here. Okay, you've got a stock that's in a really nice uptrend. It hasn't had much of a retracement, but it did have a lot of support right here. And that's fine. You had big spike in volume and a nice looking confirmation bar. Okay, a nice looking confirmation bar is that bar right there. Okay, it opens, it moves up, and then it closes, and it's just a solid. There's no tails on it. There's no. It's just a solid. That's an A grade candlestick. It's a nice candlestick, and that's the most ideal candlestick. So both of these stocks right here, these are nice looking setups for longer term momentum of a stock that has met now all of the criteria. Now watch what happens because I didn't save it. It's going to go back and it's going to delete that. Sometimes that's frustrating as you're testing things out, but just remember that's what's happening. And then if you wanted all of these and you wanted to run that scan and save it, it's going to ask you and say, do you want to update this screener? If you wanted to include that, then you would update that in the screen. Or if you want to just create a whole new one with these additional criteria, then you just have to create a new scan. Okay, now the other cool thing, and I like to do this each morning, is depending on the scan that you're looking at, you can run through these pretty quickly. Now these are pretty wide, but they do tell me something. So for example, muscle stocks not extreme. The muscle stocks not extreme are looking for stocks that have a max momentum of 140. Okay, because if you remember the max 140, let's pull in MicroStrategy and see. Okay, this range up here, it doesn't show it, but this range is from 70 to 140. So this 140 is when it becomes extreme. So I want anything in between 70 and 140. That's inside of that buy zone. Okay, so I can also kind of rule out trades that are extreme or not, or whatever it is that I want. So in this case, that's one of the criteria that I want to be able to have. And then also I like to do this one, this 555 hold to buy. Because that will pull in, that pulls in some nice names because it's looking for this. Let's let that update and refresh here. There it goes. Okay, so you can see now 555s change from a hold to a buy. Long-term trend is also up. Okay, that can be another criteria that I'm looking for. You've got market cap, you've got volume, and this the 555. So in this case, this one, anything that was higher than 5 is going to show up as well. But that at least gives you a setting to say, I only want these kind of names. Okay, so you can create whatever scan you've got right here. There's a couple of other ones. So for example, this is a 10, 10, 10, 10, no extreme, and that's what this setting looks like here. Okay, no, as of a couple days ago, DFH. Okay, so you're getting those names, you're getting those companies that Decker. These are just big, large, Amazons, the Amazons, Dick's Sporting Goods. It's those kind of companies. It's not some random biotech that you've never heard of that's creating a clinical trial for weight loss or cancer. Or there's a ton of those, and they're moving right now, and so that's the more aggressive strategies are looking for. I just want to focus on muscle stocks because I want to be able to have some of these names that are moving aggressively. Sometimes they move a little too aggressively to the downside. Like we had a trade just the other day that we ended up getting. It was a 30 or 40 or 50% gap down at the open due to an earnings report, and it was in a company that was listed here as a muscle stock, and it just got beat up. And that happens often. I would say often, but the probability of that happening are higher in companies that are not established, like a Home Depot. A Home Depot, you still might get an earnings guidance. It's like, yeah, things are slowing, but more than likely, they're never going to come out and say our earnings are down by 50% and the stock drops by 50% on a stock like Home Depot. On a stock like this, like Neurogene, that's gone from $10 to $50. Okay, one little hiccup in that trend could completely obliterate and explode that to the downside. But it's a risk to reward game. Okay, the position size, we can take more risk by putting in a little bit smaller position size. Let's see, Dave's got a question in here. Let me just look at this real quickly and we'll finish up. Is there a way to scan for stocks that have relatively smooth, low volatile prices over time, slow and steady 45 degrees? I mean, one of the things that you can do is you can look for, even some of those scans that we were just looking through are going to reduce some of the volatility. I've included beta in here as well, but I've actually found it to be pretty irrelevant. A high beta stock theoretically is a stock that is moving. A beta of 1 means it's moving with the market. So it has the same amount of volatility or risk level as the market as a whole. So if you're trading a beta stock of like 2 or higher, then you're getting a higher volatile stock than the market as a whole. So you could add in, in fact, let's see if we pull anything in here with that and say, we want to include beta, and we want a beta with a max of 1. Okay, so that's saying I don't want anything higher than 1 on beta. Now let's scan for that and see. So that reduced significantly. Okay, so now you're getting Chubb, Home Depot. And let's look at some of the charts and see. So the other thing too now is I can go back to this scan. I'm actually going to save this. So let's add this beta in here. Let's go to 1, and then let's save this. Just for now, I'm just going to name it beta. I want to show you a little trick here. Now if I refresh this, and I go to this one and I start with Eli Lilly, I can go over here to my save scans and I can now pull in my beta scan. And now I can scan through them quickly just by clicking the next arrow, which is the way I prefer to look through my scans. I just prefer to pull them in and then start to look at them. So you've got Berkshire Hathaway, relatively smooth price pattern. Okay, we know that it's a massive company, massive volume, and the beta. Let's look at the return. Okay, so yearly return 37%. So theoretically, when you trade volatility, you also trade potential return. So you're going to get stable, but you're going to get lower returns. Okay, and that can be a scenario, not always, but similar idea here. Yearly is a full year, 12. Looking back at the last 12 months, so this last month is 1. And you've got a stock like Chubb, okay, massive insurance company. Okay, that's going to be pulling in there as well. But that is also you're going to get some volatility. But even if you were to have the volatility the way that it's at here, in fact, let's look at a stop loss. If we were to buy it right now and put a stop at 247, just to see how low that number is, and we have 10 shares, that's 2.5%. If I put a stop at 247, what I want to see is what this number looks like. Okay, so the trade at risk. So even having a stop loss all the way down here, that's only 4%. So this is not a volatile stock. Okay, it had a big move here, but from here to here was only 4%. Some of the stocks that we trade in those muscle stock groups, they go from here to here, and they're blasting off, and they're moving 10% a day. Okay, this is not going to be that stock. It's going to just be chugging along, cruising, and until it doesn't, it can certainly have volatility, but it's going to be a whole lot less volatile than some of the other muscle stock names. Okay, and that's beta. Let's look through some of these. Home Depot fits in there as well. Okay, Home Depot is a great example. If we were to go back a year and look at the trends too. The other thing too is the trends are relatively smooth. Okay, you can see it goes up. What would have happened here? Okay, we know that more than likely that 236 stop out level would have been hit for sure by now. Okay, and it's nice when we do get a sell signal right at the support as well, because then we get double confirmation. We want out of that. Now it's back the other way. We're looking for this as confirmation. So what you can do here, now this scan that we just set up, I keep saying scans, but it's screens. There really is no difference. Some firms call scans are like, you think about your police scanner. If any of you have those, we had one for a while just because we lived on a lake, and so a lot of times they're living with you just listen to the police scanner to see if somebody was in trouble out on the water, things like that. So a scanner is looking for something real time. screens are screening, they're filtering. We're filtering based on looking for something as well. So either way, however you want to call it, it is what it is. We're filtering, we're sorting, we're screening, we're scanning. We're kind of doing everything there. But in this case, all of the data is as of the prior day's close. So if I were to look right now, just as we've done, we saw a couple that have already moved today. I want to make the decisions after the market is closed or before it is opened. And then once we're in that decision, we're in that trade, then we're not trying to make a decision during the day. We will have made our decisions already and set up our trade. Entry, stop loss is already in place. So that beta number, I'm actually curious now. I want to go back through these and see TJX. So it takes me back to my chart. Remember, I forgot, where was I? Oh, I come back to the chart. It's still sitting there. It's still at beta and it's still at Home Depot. So I could move on to some of these next charts, these 1 years. Let me pull this in. Give me just a second here and change that back to that 6 month time. Oh, I think it did. Now there's TJX. Okay. So you can get some volatility, but again, those are, they're going to be less volatile than the market as a whole. That's beta. So that's one of the ways to do that. So these are, with this screen. The other thing I wanted to touch on, I may touch on it more on next week, is the 21 scans. These are predefined scans that I've set up that do a lot of the things that I will like already, like the EPS of 20 and the sales growth of 20. So that's going to pull in those stocks automatically. So I don't have to kind of reset these scans. I can just go over here, stocks with 5% dividends. Here's a group. If I wanted more than that, obviously I could take that. I could create my own. And in order for me to get less stocks, I've got to have more criteria. Okay, penny volume spikes. Sometimes these are interesting too. If you're like penny stocks, anything less than $5 for the most part is going to pull in, and sometimes you can get some pretty interesting stocks here as well. I've got things are slowing down here for me a little bit. I'm going to end on that note, and I'll get this recording up as soon as I can. That'll do it for today's update. Thanks everyone for your time and effort, and we'll see you next time. Bye now.